What do you think is the better gig for drivers, rideshare or delivery?
I think it depends on the person and the timing is different, right? People are
Yeah,
ordering at non-peak times for the rides business. And
yeah,
so, it for different people, it's a different game. Some people don't like the smell of food in their car. Some
yeah.
people don't like people in their car, right?
Welcome to the Rideshare Guy podcast, where you will learn about the rideshare and mobility industry straight from Harry Campbell, who's got over 5 years experience covering the industry and has talked to thousands of drivers. There's no better place to stay up to date, entertained, and educated. So let's dive in.
Chris Taylor is founding partner of Nomad Ventures, an LA-based venture capital firm that invests in early-stage marketplace businesses. Previously, though, Chris was one of the first 250 employees at Uber, where he led the south of the United States for the rides business and later joined the founding team of Uber Eats to lead half of North America, accounting for over 25% of the global business. He subsequently ran global operations for Bird, the pioneer of the scooter industry and one of the largest micromobility companies in the world. He graduated from the Wharton School at the University of Pennsylvania with a master's in entrepreneurial management and Northwestern University with bachelor's degrees in mathematics and economics. And he's fresh off a week with his kids at Disney World. So I'm sure he's eager and ready to chat and get back to work. How you doing, Chris?
Good, good. Yeah, I don't know if fresh off is the right way to say it after a week in Disney World.
Well, I don't know about you, but after a family vacation, do you ever feel like you're like itching to get back to work? It's almost like a reprieve from, tough times.
Yeah, 100%. I mean, it's not with three kids under the age of six, it's not a vacation. It's definitely more work
Yeah.
and sometimes more work than work, right?
Yeah. So it sounds like you like to challenge yourself on both the personal and professional side. So I think this should be a great interview. And we've known each other for a while, and I'm really excited to have you on. I'm not sure what took you so long to come onto my podcast. Maybe I need to send the invite out early. It seems like a lot of ex Uber people want to come onto my podcast after the fact, but not necessarily as many during the fact. What's up with that?
Yeah, I know it's been a long time. I feel like we first like ran into each other maybe in 2014. It might be
Yeah.
right, 2014, 2015, back when I was running Texas. And once you leave a company, obviously you're speaking for yourself and you're no longer speaking for the
Yeah.
company. It makes it a bit easier to have conversations.
For sure, for sure. No, and I definitely will say that, I've appreciated a lot of the conversations. I'm sure that folks at Uber probably have not loved or agreed everything that I've said in, my 9 years of, saying stuff onto the void of the internet. I'm sure I've said some pretty bad things and pretty good things and everything in between. But I do feel like almost everyone that I think I've met that is sort of, beyond their time at Uber, I think that we've a lot of folks I've sort of ended up friends with or friendly, or, I think there's a mutual respect. So definitely appreciate everything that you did at Uber. And I'm excited to have you on. And kind of where I want to start is back to those 2014 times, because, so I was in reading your bio, I guess I forgot, 10 years ago or 9 years ago is a long time. So you started with Uber, then you kind of transitioned to Uber Eats and Bird. And so you've kind of really been at the forefront of a lot of these kind of mobility revolutions over the years.
Mhm.
I mean, what do you think all of that experience has made you an expert in? I mean, I know people don't like to hype themselves up, but if you had to describe to someone like what you know a lot about, what would you tell them?
Yeah, it's interesting. I think when you look at 30,000 feet up, Uber Eats, Bird, they're very different businesses, right? One's a
Hmm.
two-sided marketplace with, consumers and drivers people trying to make extra money. Eats is a three-sided marketplace, so you had the third side of the marketplace with the restaurants. Bird, outside of the franchise business, is not a marketplace at all. It's a hardware company. All that they really have in common is that they're high growth startups. But I think when you talked about my bio, my background undergrad was in math and economics. And
Hmm.
one thing that really drove me to Uber originally when it was Black Car only pre Uber X and when I joined was the economics of it, building supply and demand and finding an equilibrium. I
Yeah.
really loved marketplaces, right? You're not necessarily selling a product, you're not manufacturing a product, you're just trying to find that equilibrium. And it took me back to my classes, in undergrad at Northwestern,
Yeah.
where we learned about equilibrium, and that one thing that always struck me when I first joined Uber. I remember about 6 months in, we got valued as a unicorn. So
Mhm.
when I joined, it was pre $1 billion company, and I remember all the naysayers saying, how could this be $1 billion company? The global
Yeah.
taxi industry isn't even, all the taxis combined in the whole world aren't even $1 billion. It just took me back to my macro and micro classes on economics, where the pie or the cake, if you will, like you look at it, and if you could build something that is a marketplace with supply and demand, everyone just sees the first layer of the cake and they say, okay, you're going to take a piece, and limos are going to take a piece, and taxis are going to take a piece, and buses are going to take a piece. And what you realize is that transportation is actually like a 8-layer wedding cake, right?
Yeah.
And there's just all this untapped demand, right? People were traditionally only taking taxis to and from the airport, right? Or to and from their hotel. People were very barely using limos, and everyone owned a car. And so, when I first joined Uber, what really drove me to it was that when you can unlock more supply, there's just unlimited demand, and there's the extra layers to that cake. And from a valuation perspective, it could be so much bigger, than people thought. I mean, again, people thought it couldn't be a $1 billion company, and now it's a $67 billion company right now.
Yeah, I think there was a famous post by Aswath Damodaran around that time, right? The NYU professor. And I remember him kind of referencing the limited TAM based off of the taxi market. And I think Bill Gurley, who obviously, was very vested in the success of the company early on, kind of wrote a counter post saying, no, it's not just that. It's kind of everything that you described. And I think one of the key things you said, though, was like unlocking additional supply, right? I think the challenge we've seen with a lot of fixed fleets, or if you own the fleet, right? If you have enough supply for Saturday night, then you've got too much for Tuesday afternoon. If you had to kind of like pinpoint one thing that you sort of made Uber work or really unique, or I know there was a lot of cool innovations, but what would be one thing? Do you think it's on the supply side or a different area early on?
It's 100% supply side, right? And to your point, what we used to always say is that demand is not fixed, it's dynamic, right? And so because that, supply needed to be dynamic, right? What you need for someone going to a work meeting at 2:00 in the afternoon is very different than the amount of people requesting at 1:00 in the morning when they're leaving bars, or 10 p.m. when they're going to bars, right? I mean, Travis always said the first use case for Uber is nightlife. And he was right. And the amount of people leaving at the exact same time at last call is very different than what you need at 5:00. And so the being able to create a variable supply, and that's one of the things. And it's not, taxis were a failing model to be able to capture the TAM, but it wasn't their fault, right? The fixed fleets are a function of the number of medallions that existed.
They also had fixed prices until literally, I think a year or two ago. I think the prices were almost the same.
Exactly. And now everything's dynamic, right? Your tolls are dynamically priced, and it makes sense. There's a difference. Like, you want to be able, and going back to the econ, you want to be able to balance supply and demand, and to be able to do that in a variable world, you need to have variable amount of vehicles, you need a variable pricing, and that gets you to the, so to speak, the right clearing price, the economic term, the right clearing price to maximize the size.
Yeah. Well, and I love this sort of idea. I was not a big fan of school. I was an engineer by trade. And then, now I'm a blogger. Right? So I kind of do the opposite of what I got my degree in. But it does, it
worked out all right.
Yeah, it worked out okay. But, you're talking MBA, and like, I think, the joke, or not the joke, but the poking of MBAs is often, that it's all theoretical. But it sounds like a lot of the stuff that you were looking at and working on, when you got your MBA, kind of like ended up playing out in real life when it comes to economics and demand and supply, and also surge. I think surge has always been a great example of something that seems, it's like the one thing the customers used to hate about Uber on the surface, right? But deep down, it's like why me as a driver, when I signed up in 2014, I would go out Saturday night in Newport Beach, California, because I could make more money. There was no way in hell I would have been driving for normal rates, right? So what did you think about like either surge or some of those kind of like MBA to real life, sort of execution things that you saw from your time at Uber on the rideshare side?
I mean, first, I love surge as a academic, right? It made so much sense. And behaviorally, so my example for surge, when people, my friends would complain about surge, I'd say, okay, like, let's take the edge case scenario, right? It's New Year's Eve. It's 2:00 in the morning. I lived in Chicago, and then I lived in Boston. I went to business school in Philadelphia. It's snowing on New Year's, right? You paid a couple $100 for an unlimited open bar, and the bar closes at 2:00 in the morning. You want to keep going out with your friends. Like, how much would you pay for a ride home? Would you pay $10? Would you pay $20? Would you pay $40? It's not a normal Friday. Would you pay $100? Right. And like, people are like, oh yeah, I definitely pay that, because everyone remembers that time they had to walk home in like 12 inches of snow because there were no cars available. And they're like, oh yeah, now I get it.
That literally
Yeah.
happened to me in Lake Tahoe one New Year's Eve, like before Uber. No joke.
Right. Right. And it's all because there wasn't surge, right?
Yeah.
And so there were only so many vehicles, and you end up getting surged anyways. Like there's one taxi in
Hmm.
Boston that drives around and you're like
Right.
throwing hundreds of dollars at them and their
Yeah.
meter's broken, right? It's funny to your other question on, when I joined Uber, there's still a negative connotation for business school and
Hmm.
graduate schools and even school in general in the tech scene. And I remember when I first joined, myself and Rachel Holt went to Stanford GSB,
Yeah.
and I went to Wharton, and Megan Joyce and I started the same week together, and she went to HBS, and we were the only MBAs. And I remember Travis sort of like digging us perpetually on calls, just being like, well, if you didn't get your MBA, imagine how early you could have joined, right?
Yeah.
Instead of 2013, you could have joined 2011. And there was
Yeah.
always like, early on, there was a negative connotation. And then you started to see the value that MBAs could provide. Obviously,
Hmm.
like understanding surge, things like that, understanding supply demand. I remember when we first, launched Select as a product. Now it's Comfort, but Select as a product. We had created a barbell pricing strategy
Yeah.
of UberX and Black Car. And what we realized was that the Black Car was too expensive relative
Yeah.
to UberX, and so people weren't getting upselled. And so we put together a presentation for Travis on alcohol pricing models and how like beer
Hmm.
companies have like a slightly above mid-tier product. And it helps people rationalize the higher end product because it's the Budweiser is, $4 and, some craft beers like 10, and that's the bridge too far. But if you had
Yeah.
a mid-tier product at like 7 and people are drinking that, then every once in a while they'll drink the $10
Yeah.
beer.
Is
Right.
this
And
what they call in business school price targeting?
yeah, exactly. And
All
and
right.
we put together a
I
case
know enough to
study,
be
and
dangerous.
yeah. And it made sense. And so I think there was over time there became a realization of the value of
Yeah.
MBAs. I'm a big proponent of people getting their MBAs, but I do think there are pros and cons. There is an opportunity cost
Yeah.
of 2 years. It's not just the money that you pay, which is a lot, but there's opportunity cost of going to start something. And yeah, I've had a number of people work for me over the years that have asked, should I get an MBA? And I'm like, you have to do what's right for you. And
Yeah.
if you think it'll be beneficial in terms of network and education, then go do it. If you don't, if you think that you can start your own business without it, then don't.
Yeah. No, I like that explanation a lot. And I'm sure that in a lot of these high growth organizations, there's probably, wouldn't be great to have all MBAs or no MBAs. But I think, like with anything in life, moderation is a good thing. And so, I've got a bunch of questions I want to ask you about the current state of Uber and rideshare. But before I get there, one last thing that I want to ask you from your time there, any regrets or anything that you wish you could have done over or differently, kind of focusing on your rideshare period at Uber?
No, I loved it. It's interesting. I remember
Not got an
having
MBA and joined earlier, sounds like. No, not that.
well, that's the thing. I mean, I don't know if I would have made the right decision if I didn't join earlier. I
Yeah.
probably wouldn't have targeted something like Uber because I had met people in business school that had started businesses,
Hmm.
and it helped me. Like one of my biggest mentors was a fellow Wharton student, Davis Smith, who founded Code Epoxy, the backpack Gear for Good company, and he had started pooltables.com when he was at BYU.
Yeah.
Right. And so he was an established entrepreneur, and he taught me the value of dreaming big when you're doing startups. Like don't go for the don't go for the singles and doubles. Like try to be a home run hitter. Go for the big whales. And I probably wouldn't have joined, a company like Uber if I started in 2011, right? And in terms of Uber, what I remember, this is another just random Uber story, but when you have that high growth, when you have that lightning in a bottle, you know it when you see it. And I remember
Hmm.
we couldn't hire people fast enough. This is like early 2014. We couldn't hire people fast enough. And so what we decided was to target our rider and driver base for potential employees.
Hmm.
And so we sent an email out. We had to fast track people through interview processes. And so we thought people that love the product are riders and drivers.
Yeah.
Right. And so we sent an email out that said, your dream job is arriving now. And you'll remember the
Good
obviously
tagline.
a play on the your Uber is arriving now.
Right.
Right. And I remember we had so many applicants, everyone was applying, and we had a happy hour so we could get like a first look at people and
Hmm.
figure out who to bring back for interviews. And this one person who ended up working with me for 3 or 4 years, Christine Pfeffer, she came through that process and she said, this is in Chicago at the time. She said, it's great. I love the tagline, great marketing. It's key. And I was, the marketing is key, but obviously it's just a job. And I was like, it's not. It's
Hmm.
not. At that point, we had realized that we had something,
Yeah.
and I'm like, it's not. It's so much more than that. Like I told her at that time in 2014 that it's one of those things where it's bittersweet right now because I love it. It's amazing. I've made so many friends between riders and drivers I talk to, employees, everyone. It's a moment in time. And it's bittersweet because at some point I know this is going to be over. And the sad reality for the rest of my life is I know that I'm going to be chasing that dragon for the rest
Yeah.
of my life, knowing that we'll never have this again. That's helped me evaluate startups when I start to see lightning in a bottle, but I've yet to find something that even remotely compares to what we had.
What made you realize, it sounds like in early 2014, that Uber was going to be, something, the next best thing, one of the most talked about companies in Silicon Valley history, whatever, sort of adjective you'd like to use to describe it. But like, was there one thing or like a feeling? Was it the hiring or?
It was a feeling,
Hmm.
you like talking to riders, talking to drivers. I had so many interactions with riders where, people for the first day, anytime I said I worked at Uber, people were like, they remembered their first Uber experience. And almost
Mm.
everyone at the time, their first Uber experience was on New Year's, right? But
Yeah.
they all remembered it. It was the
And just for
conversations.
context, the model it was UberX at this point,
At
or
this point, I had gotten the Uber Act,
just under a billion still?
just under a billion. It was a little over a billion at this
About to
point. We
be.
would have.
Got it.
This is early 2014 when we really started. Uber X started taking off, and I would talk to drivers. I remember we launched Houston, and
Hmm.
we hadn't launched yet. I flew in from Chicago, and I had a taxi driver, and he was just so unhappy. The taxi was a mess. He looked exhausted. I spent a lot of time talking with him, and he was like, I'm working 80 hours a week. I'm
Yeah.
making $1,000 net, but I'm paying 700 to the medallion owner. I'm barely paying my gas. Like I'm barely making money. And I told him about Uber and he was like, all right, I'll sign up. And then I randomly, and this is early days, so there aren't that many drivers. About a month later, we had hired a team. I came back to meet my team and I ended up getting him on the Uber platform in his
Yeah.
own minivan. And same guy and completely different. He was like, I'm working 50 hours a week instead of 80. I'm making 4 times what I used to make. This has completely changed how I like spend time with my family. And it was so exciting to have that kind of conversation, right?
Yeah.
And not every conversation was like that, but there's so many like that. And so riders had this magical experience. Drivers when they came on, especially people that were traditional taxi drivers that came on, had an amazing
Yeah.
experience. And then also the employees, like those early days, I mean, we were working 100-hour weeks. Like startups are
Hmm.
a grind, but the Uber was a grind with Travis. And we're working 100-hour weeks. We'd be in the office. Everyone was eating dinner together at
Yeah.
11 o'clock at night. We were leaving the office at 1. I was spending my weekends answering rider support tickets, driver
Hmm.
support tickets, getting pictures of like throw up in the car and having to like manage those. But everyone was so happy to do it. Like
Right.
I was a GM and I was doing 100 driver support tickets a week. Right.
Hmm.
And everyone was doing that. And that's when you have something, is when everyone is just so excited to wake up,
Yeah.
sleep deprived, get to work, build the thing. It was
Probably
just, it
more
really
fun
was a
to look back on it these days than to potentially experience it again.
yeah, yeah. At 41 now, it might be a little harder, but if I ever found that again, I'd have no problem jumping back in. For the right thing, I would
Yeah.
do it all over again. It was just such a magical time.
Yeah. Do you think Uber was sort of a once in a lifetime experience company? Because obviously, I think it's kind of the pinnacle of, especially in the VC investment side, people, oh, this could be the next Uber, or, they talk about it. Oh, this early investor made this much money, or obviously the folks that have come out of it, right? I mean, do you think it was just kind of like a once in a lifetime thing, or do you think there are more opportunities that might get close?
I think if there are opportunities that get close, it might be one or two more in my lifetime.
Yeah.
Right. I just don't think the way that we scaled the speed that we scaled that. I mean, at the end of 2013, we had about 340 employees.
Hmm.
Right. At the end of 2014, we had like 1,300.
Yeah.
And at the end of 2015, I think we had like 5,000.
Yeah.
Right. I mean, the scale that we built things, people say things like this could be the next Uber, but in 2014, 2015, like we were growing 8 to 10%
Yeah.
a week, right? Like a lot of companies are like, oh, we're going to grow that, over the next quarter or the next
Yeah.
month. If you had a 5% growth week, that was a down week.
Got it.
Right. And so it's just so hard. People can say it, but I have yet to see something,
Yeah.
including Bird, that had the opportunity that Uber did.
Yeah. Well, and obviously I was, in the arena, but definitely looking in from the outside. And Bird is a good example, which we'll definitely touch on today, but because it had similar feelings at certain points. But definitely, kind of I always joke that like I was there riding the coattails of Uber. My blog, I started it in 2014 and
Yep.
didn't really have much unique insight other than good timing. So, fast forwarding a little bit to today, I would love to know like what's your current thoughts on the state of the rideshare industry? Obviously, Uber is still around. They're huge. I don't think they're going anywhere anytime soon. Lyft has, had a lot of issues, especially with their stock price and new CEO. Like if you kind of had to sum it up in, I'll give you 30 to 60 seconds or less, like what's the state of today's rideshare market?
Yeah, I mean, it's not dissimilar from, I left Uber at the end of 2017. So
Hmm.
it's been almost 5 years, or I guess a little over 5 years now. It's not dissimilar from that. I think, from where I stand, Uber is a large global player that's diversified with Uber and Uber that rides business, the eats business, trucking, freight, and other verticals. And Lyft is a regional smaller player,
Hmm.
right? I mean, I didn't oversee cities like San Francisco where Lyft had a decent market share. I was playing in Dallas and Houston and Austin
Yeah.
and San Antonio and places where Uber's market share was north of 75% the entire time I was there. And so,
Yeah.
it's not dissimilar from what I saw. I think the biggest difference is
Did you
that
think of Lyft as a competitor during that time, or were you sort of just hyper focused on what you were doing?
more hyper focused on what we were doing, but
Hmm.
they were a competitor, right? They were the competitor. I mean, I
Yeah.
remember Sidecar and
Yeah.
Sidecar. I didn't really, we never really viewed them as a true competitor, and there were a few other players that bounced in and out. Lyft was the only real competitor. I don't think that they were up to our level, but they were the one that came the closest. But we were always focused on ourselves, right? Because like the one thing, going back to Surge, the one thing that I think 100% of people get wrong when we talk about Surge is like Surge wasn't a good thing, right? Like if you
Ah.
got as an employee,
Oh, for
if
drivers
you
it was.
yes, for drivers yeah, it definitely was, and it maximized for employees. It just meant that like you messed up the supply
Yeah.
demand balance,
Yeah.
right? And so you want to capture more rides, you want to be able to capture a bigger piece of the pie. Surge meant that for whatever reason, Lyft was gaining on you. So,
Hmm.
but other than that, we were focused on ourselves.
Got it. How do you think Uber is doing these days? Do you judge it based off of the stock price? Do you judge it based off of, just how people are talking about it? Or, do you judge it based off like you've been there, you've worked there, and you know what it could be or couldn't be?
I think they're doing great. I think they're
Hmm.
doing great. There are differences. I'm in the sort of like OG Uber camp that I'm a Travis loyalist,
Hmm.
but
What are the
I
different
also
camps? I haven't heard this, but now that I'm
well, I just
thinking
think
about
I
it,
just
there's
think
got to be a few, right?
you essentially have like Travis loyalists, and you have people that are like after Travis,
Okay.
right? That
So
are
two periods.
Dara loyalists. I'm in between. I think both Dara and Travis have done a very good job. I think Dara is the public company CEO that a company like Uber as a multi-billion-dollar public
Hmm.
company needs. You're seeing Lyft transfer out their founders and go with a more established CEO after losing market share. I think Dara's done a really good job as a public company CEO.
Yeah.
He's continued to build brand loyalty with riders, with drivers, do big brand initiatives. It's definitely a different business than the high growth, let's focus on autonomous vehicles and things like that we had under Travis. But I think both have done a good job. I think Dara really found a way to weather the COVID storm,
Yeah.
right, and make it out of there. I mean, if you look at the stock price or the market cap of Uber versus Lyft, pre COVID and post COVID, Very
Yeah.
different.
I'm curious, like I'm definitely no expert when it comes to stocks and, financial metrics. I've done episodes in the past with investors where I tried to make them explain to me all the quarterly financials.
Yeah.
But, how important, I don't know, had the company, I guess you were there when it IPO'd, right? And so
Mhm.
how important is the stock price to, either employees or, shareholders after the fact? Like, is this like the North Star? Like, oh my God, wow, Lyft is, like you said, right? The companies were tracking pretty carefully if you plot their stock price, at least the trends up and down. And then since COVID, it's basically they've diverged, right? So
Yeah.
I'm curious, like, how does that stock price fit into, the narrative and, especially for folks that are at these companies?
I mean, for someone like me, I'm so bullish on Uber that I really haven't sold much of my stock.
Got it.
Obviously, for me, the stock price hasn't changed much since when I left in 2017. I think it was about
Right.
$40 a share at that point.
Same price, right?
Yeah, it's about the same price. It's had its ups and downs. It's a little down from there, but yeah, I think you're seeing a divergence. I think there was like a 4x. Uber's market cap was maybe pre-COVID was like 4x Lyft's,
Yeah.
and now it's about 12x, right? And so you're seeing that divergence for employees. It's interesting. I mean, you obviously want a higher stock price, and you obviously
Yeah.
want a higher market cap, because then, like, as you're issuing equity to employees, you can issue fewer shares
Right.
at a higher price. Like, as your stock price, and this is the problem that I think Lyft is having, that when you look at their shareholder equity and their option pools, like, as your price gets lower and lower, you have to give more and more options to employees, which
Hmm.
means you can hire fewer and fewer without completely diluting
Yep.
your shareholders, right? And you end up in this downward
Downward spiral. Yeah.
spiral that it's very hard to get out of. And I think that's the talk about Lyft over the last couple of weeks, is that they've sort of hit that downward spiral, and are trying to find a way out of it. But
Yeah.
yeah, it creates a problem.
Let's talk about Lyft for a second, because what are your thoughts on Lyft? Obviously, they just came in and announced a new CEO. And I think the sort of, I don't know if you would say feeling, but I guess the theory actually is you're the perfect guy to answer this question, right? Because the theory has always been, right, that in this, kind of more of a winner takes all marketplace, right? Like everyone was kind of always asking the question, like, how is Lyft able to sustain this second place market share in a business where there's network effects, right? Where, the more drivers you have, the more rides you can do, and the cheaper and less surge, just like you were talking about. And, I think those market share numbers were pretty consistent really until the last 1, 2, 3 years. And so I'm kind of curious, like what changed? And then obviously, the stock price for Lyft has, dropped off a cliff.
Well, I think one of the biggest changes over the last year is that the macro changed away from a zero interest rate environment. I think even when I was on the rides business, 2014, 2015, 2016, it was just incredibly easy for anyone to fundraise, right?
Hmm.
And I think we were much more efficient with our business. We were way smarter in terms of spend, but it didn't
Got it.
matter because everyone could just raise money,
Got
right?
it.
And I think you're really starting in a non-zero interest rate environment where the cost of capital is higher. It removes that crutch, and it
Hmm.
makes it harder. You start to see the cracks in the infrastructure a little more, because they were painted over with zero
Got
interest
it.
rate,
Like maybe
fundraising.
Lyft's, marketplace wasn't quite as efficient, but they had some extra dollars. And so they could incentivize drivers and pull some away from Uber. I mean,
Exactly.
that makes sense for sure for private companies, but the last few years, right, 3, 4 years, both, or yeah, private, but the last few years, both companies have been public. Is there a way you think even Lyft was able to still take advantage of fundraising and things like that? How do you do that as a public company, I guess is my question.
Well, so there's a couple things with public companies. I mean, the first one is you still have the capability to raise money, right?
Got it.
Debt or equity. The other thing is you have large institutional investors,
Mm,
right? And they want to buy a basket of an industry, right? Or
got
they
it.
might view, not knowing what you and I know about ride sharing and network effects. They're like, we want to buy into ride sharing, and Lyft stock price is undervalued relative to Uber. So I'll
Mm,
buy Lyft instead of Uber. And
got
you
it.
kind of see that, like, you'd see that if you look at the stock price, over the last like 3 years, you'd like Uber would have a good quarter and Lyft stock price would go up,
Yeah.
with the assumption, people are assuming, well, it's just a good quarter generally,
Yeah.
right? Or Lyft would have a good quarter and Uber stock price would go up.
Yeah.
And as a shareholder, that's infuriating, but it makes sense. Like, you're like, I don't understand this. Like, Uber just had good numbers, and now Lyft stock price is like, jumping. How could that be?
What do you think is the future of Lyft if you sort of had to predict maybe 1 or 5 years out?
Oh, I don't know. I think,
All right. Well, easy
you know,
one. Will they still be around in 3 years?
I think they'll be I don't know. I think that, they could be around as a part of another company. They could also
Hmm.
still be public. I think that as a public company, there are ways to stay alive. And I
Yeah,
think that they will for a long time. I think it's very hard to actually like completely go under as a public company. And I
got
think
it.
they'll probably, yeah, they'll be around for a while.
Yeah, no, I think I like that explanation. I think it makes sense. I mean, even just it's hard for me to envision like a brand like Lyft that maybe they don't aren't anywhere near the dominant market share player, but so many people know the name, right? I just feel like they have so much.
Exactly.
You can't get an Uber ride one day. Oh, I still got the Lyft app. Let me hop on a ride here and there, even if it's 1 out of every 10, for example. So
Yeah,
you mentioned,
you'll still have some amount of drivers dual apping and
yeah,
things like that. Even if they're only getting one ride out of 10, they'll
yeah.
still it's a slow move down.
Yeah. And I mean, you mentioned acquirers. I know there's been some talk of, oh, Lyft and DoorDash, someone like that could acquire Lyft. But I kind of want to hone down enough talk about Lyft since you're an Uber guy. So let's focus specifically on something you did work on, food delivery, right? And the Lyft
Mhm.
and DoorDash has kind of given me, the segue that I've been thinking about. Like, how do you think about rideshare versus delivery, food delivery specifically? Is there a business that you like more or less, or do you think has more opportunity in the future or less?
Personally, I think rideshare is the bigger opportunity. It's interesting considering Lyft's market cap and DoorDash's market cap, right? But I just think the number of rides, as you start moving away from car ownership for people, right? That was our big thing, in the early days, and we took this from Zipcar, but it's our
Yeah.
main competitor is car
I was,
ownership, right?
yeah, definitely.
Yeah. And I think as you get further and further away, and as like younger generations, don't get driver's licenses when they turn 16, that TAM of ride sharing is
Yeah.
just so much bigger. I think there's only so much takeout you can eat in a in a week. You have a finite amount,
Yeah.
whereas like the rides, you get rid of your car, and there's way more rides. And so I think the TAM of ride sharing is ultimately bigger, but they're both really big. I remember when we launched Uber Eats, everyone had asked us, when's Uber going to do the Uber for dry cleaning? When
Hmm.
is Uber going to do, XYZ delivery? And Travis always said, it's not worth a minute of an engineer's time to do anything other than ride sharing can be so big that's not worth a
Yeah.
minute of any engineer's time unless that market size could be as big. And
Mm.
back in like I think it was 2015, Mary Meeker had her industry report that
Hmm.
everyone waits with bated breath for, and she said that 80% of U.S. discretionary spend is on three things: it's on transportation, it's on food, and it's on lodging,
Mm.
right? And Airbnb obviously had lodging, and we had transportation, and no one was playing in food. And then we're like, that's it. That's the other big market, right? And so while I
Hmm.
think ride sharing is bigger, I think food delivery is very big as well.
Got it. So I'm curious about the kind of unit economics of each business because I've sort of always felt pretty strongly that, I kind of joke like you'll pay more for a ride for yourself than you will for your burrito, right? I mean, on a Saturday night, Surge, New Year's Eve, you don't have a lot of I mean, you literally have no options to get home, right?
Yeah,
If you've been out
yeah.
drinking, Friday night, New Year's Eve, you stay home, you want to order takeout, too expensive. I could cook food. I could go to the grocery store. I can go pick up the food myself. I mean, physically you do have a lot of alternatives. They may not be as good, but and I think for those reasons, like I've always been a bit skeptical of the margins that you can take. And I think Uber sort of showed this with rides during the pandemic is that they started raising prices and, people didn't have alternatives and started paying more, right? They didn't get to the same number of rides that they were doing pre-COVID, but they got to the same level of revenue because riders were paying more. So I'm curious, how do you think about like the unit economics of rideshare versus food delivery?
Well, I think they're two completely different beasts,
Hmm.
right? I think on the rides business, it's a much more simple equation,
Hmm.
right? It's like how much can you charge, and how much does the driver make on that, and
Yeah.
then what's the unit economics? And as you said, the one advantage of ride sharing is that people are somewhat price inelastic. I think at
Yeah.
some point they'll find other options, right?
Yeah.
They will take a taxi. With Uber, what I'm amazed by is Uber is still, with even increased prices, way cheaper than taxis,
Yeah.
right? And I
More reliable.
constantly, my in-laws take taxis, and I'm like, oh, how much was it? And they're like, well, it's cheaper than Uber. And I was like, what
Yeah.
was it? And they tell me, and I'm like, oh, it was actually 30% cheaper if you had taken an Uber. So,
Yeah.
but they in their head, they're like, oh yeah, taxi's cheaper. And I'm like, no, it's worse. it's
Right.
more
Well, I
expensive.
mean, there's just more variation, right? There are times, right? If you get out of an airport and Uber happens to be surging and the taxi drivers don't have any insight into that, right? You could potentially get a ride, but you might have to wait in line. Or it's definitely, if you did that 10 times in a row, you might only get a ride 2 out of 10 times, right? So it's
Yeah.
always like,
Yeah.
it always comes with string. Like if a taxi is potentially cheaper, like there's strings attached. Like it's not like it's a better or more efficient business model. So it is funny when
Yeah.
I do see people tweet out like, "Oh my God, taxis are way cheaper than Uber." I'm like, no, in this one
No,
instance,
in this one
it
instance, I
was
know.
more
Like
reliable and cheaper.
I went to Arizona with some college friends for preseason baseball,
Hmm.
right? And one of my friends was like, "Oh, I'll grab the Uber because
Yeah,
we were going golfing." And I hop in, and I'm like, "Wait, this is taxi." He's like, "Yeah, yeah, I was right there." And then it ended up being like $105 ride.
yeah.
And I was like, I showed him on the Uber app. I'm like, it would have been $42 on the Uber just for context. And he's like, I had no idea. And I'm like, well, yeah, it's a more simple equation, right? From a
Yeah,
unit economics perspective. And you do have that price and elasticity. What's interesting about Eats from, from a unit economics perspective is that like there's a lot of things at play where you have different levers as the business, the marketplace, right?
yeah,
So there's the like takeaway rate you take from the restaurants.
yeah,
There's the distance that you're going, right? Because the drivers are ultimately paid by like how far the ride is, right?
yep,
As part of the equation. And so as you get more density, you could potentially, close off the geofencing.
yeah,
That's one of the interesting things when we first started working with large like QSRs, like fast food restaurants, was like the average basket size, the average person, orders like a $30 Uber Eats order,
right.
right? Not a family. I mean, mine with three kids and
Yeah.
in-laws living with us, it's a lot higher. But in general, it's like
A
30
normal
bucks. But
family.
yeah, but like McDonald's, for example, is like a $10 or
Yeah,
$8. And so you're like, how do you make the unit economics work? Well, there are thousands of McDonald's. And so if you
hmm,
can make it so the delivery is only at any given place because of all the McDonald's is less than a mile
right.
away, then all of a sudden it's like shorter
Mm,
rides. That changes the unit economics and you
yeah.
can make that work, right?
So I think that's I've never heard it put in that way. I mean, obviously a lot of folks refer to food delivery. It's tough because it is a three-sided marketplace with drivers and customers and restaurants. And, I think for that reason, like I've always said that it's like kind of like playing a game of telephone, the customer orders through the Uber app, Uber relays that to McDonald's, a delivery driver then has to come pick it up. Like, okay, there's now four people that have been in the middle of this equation, lots of opportunities for things to go awry, right? And that's why, you get a burger and fries. Oh, they forgot the ketchup. Damn it. My order is ruined, right? It's like
Yeah.
tiny little thing, but you could see how
Yeah.
that stuff can easily get lost. But what you said that I think is really interesting is the density part. When you have
Yeah.
really high density, you get to start to take advantage of those three sides. Like I feel like if it's like a normal delivery business, it's like, wow, three-sided is really tough. But once you get like McDonald's and a lot of these, QSRs are the, most popular orders, I think, right on Uber Eats, right? So it seems
Yeah.
like to really do well, you kind of have to either have really high basket values, for like a big family,
Yes.
or really high density might be the two kind of key
Yeah.
takeaways that I'm hearing.
Well, the other two things that you could have, and again, there's more levers on food delivery. Like you have batching, right? You
Yeah.
essentially have Uber Pool, but for food, right? You could give people, we'll waive your fee if you order from this restaurant in the next 2 minutes
Right.
because that Uber's algorithms know that five other people in your
Right.
area order from that restaurant and the driver can pick them all up, right?
Or we'll charge you
Um,
more to get delivered first, like how both Uber Eats and DoorDash now do, right?
Exactly. Or, the other one is not using a car, right? Using an
Hmm.
e-bike or a
Yeah.
moped or a motorcycle or things like
The
that.
thing I
That
don't
change.
love about batching though is that, like with Uber Pool, folks, still get 100% of their destination. It might just take longer. With food, the quality is literally deteriorating, right? With every minute. I'm imagining there's some important KPI between, when the food is picked up and when it is delivered. There's got to be some correlation between, I don't know, bad experience or something there, right? Like, do you think that batching, hurts that side of the batching or limits the
It
potential
depends
there?
on the algorithms, how well your algorithm places people, and also the density of your product. As you get more scale, then you're much more likely for people to be close by, right? And so if you're only
Got it.
batching people a block away, then
Hmm.
not an issue, or on your route. But if
Yeah.
you're, they're going miles out of their way, then your food is gonna get bad. And that's, in a lot of these companies, what was amazing actually early on when we worked with all these QSR company restaurants, the level of data that they had on their products,
Hmm.
like as opposed to a mom and pop restaurant, like knowing the exact point to the minute from when the fries get out of a fryer to where
Yeah.
they have a negative taste for consumers. Like
Mm.
they know that to the second.
Wow.
It's kind of amazing. And so we had to work through all those things. Like, how do you ensure that delivery happens within X amount of time of the food being put in the bag?
What do you think is the better gig for drivers, rideshare or delivery?
I think it depends on the person. That's the key. Is there's different times of day, right?
Hmm.
A lot of the drivers before we had Uber Eats, that's one of the things I loved about Uber Eats when I came over to it was, a lot of drivers, I would talk to drivers in Texas, and we had some amazing people that were just like, I just can't, like, I have to take care of my kids after
Yeah.
dinner. Like, I can't be out at 9 o'clock on a Friday.
Mm.
But like, I'm dropping my kids off from school and to school, and I have nothing to do midday. And we're like, yeah, that's not when people ride
Right.
Uber, right? Like some people do, but you're gonna make less money because there's fewer rides,
Hmm.
and then you add all of a sudden you add Uber Eats and the timing is different, right? People are
Yeah.
ordering at non-peak times for the rides business. And
Yeah.
so, it for different people, it's a different game. You don't have someone in your car. Some people don't like the smell of food in their car. Some
Yeah.
people don't like people in their car, right? And so that I
That's what
think
I
there
thought
really
you were going to say. I thought you were going to say some people don't like people, which is
yeah,
honestly like a good reason to do delivery. You don't have to talk to people.
you don't have to talk to people, right? Although
Yeah.
one of the interesting things, a lot of people do like talking to people, right? A lot
Yeah.
of being in Texas, a lot of, especially at the time when I was in Texas, a lot of our drivers that we worked with were either retirees
Hmm.
that just like they're like, I'm gonna go play golf in the morning and I want to do a couple of rides and just talk to someone and get out of the house,
Yeah.
and so they did want to be social. Or a lot of them actually specifically in Texas were it was a lot of veterans,
Mm.
and a lot of them were like had PTSD. Their therapists were like, we had a number of therapists that were recommending driving on Uber because they're like, they didn't know how to re-engage with society
Yeah.
after the war. Psychiatrists would say, go on Uber because then you can have a conversation for 10
Yeah.
minutes with someone you're never going to see again.
Yeah.
Right. And just to like start that going, as opposed to having like, I'm going to go get set up on a date and have a very long conversation trying to impress someone. You could just get in the car, drive, talk to someone for 10 minutes, never see them again, and start building that muscle memory again.
For sure. For sure. How do you think Uber's relationship with drivers is these days?
I think it's good. I'm obviously on the outside looking in. I also have rose-colored glasses because I also thought it was good, back
Yeah.
in the day. I think on the whole, the company was always looking out for drivers. It is now too, is very driver focused now. Supply, like the drivers are always the most important part of the business, and we
Yeah.
took that very seriously back then. I think two things. One is still true, which is just like you're going, with millions of people on the platform, some people are going to be happy regardless of what you do, and some people are going to be unhappy regardless of what you do. You try to
Yeah.
build the best experience, but you're always going to have something. And I think the other one that's not true anymore, which was like we were growing so fast
Hmm.
that sometimes we made mistakes.
Yeah.
We made mistakes a lot, and you were just trying to. At some point, you were just trying to hold on to the roller coaster. That's different now. Large public company with 40,000 employees or whatever,
Yeah.
and at some points, like I was like I would have just be swimming in driver tickets, and just doing what you could to try to talk to people.
Yeah.
But
Yeah. No, I think one thing that's been interesting for me, from the outside, I think my personal view has always been, that there's more positives than negatives when it comes to driving. I mean, that's why I built a whole business around covering drivers and
yeah,
helping them. It wouldn't be so profitable if I thought the opposite, or probably that fun of a job either. But it seems like definitely from, maybe the first 5 years to the last 5 years, I have been surprised that a lot of folks that I talk to from the early Uber days always tell me, oh, drivers were important. We're always thinking about them. But I think it maybe wasn't always shown. And I think, not like you said, now what Dara is, I think, better at is like showing, hey, we're thinking about drivers a lot. And then now they're telling people, there was
yeah,
this big article that just came out in the Wall Street Journal,
yeah,
Dara's out there driving, like a lot of this stuff that he's finding, I thought was pretty obvious. But, if the CEO is doing it, it's like, wow, this must
finding,
be,
yeah,
important. Right. And so I think that, that is important, right? Like perception, like fixing things, but then also, letting drivers know that you're fixing things or that you care, you're working on things. Like there may not have been time for it then, but it definitely seems like Uber is, taking time for it now. And, I think it matters.
Yeah, and I think they're doing a really good job with it, right? And the other thing, Dara's in the Wall Street Journal article, but there are probably 100, if not 1,000, people at Uber taking rides as
Yeah,
drivers
that's
and
what I thought.
pointing
Well, I
things
know
out,
that there's
right?
probably thousands
Yeah,
of people at Uber now driving. And so it's
yeah.
like,
I
I
mean,
know that Uber knows about all these things, but, it sounds good in a Wall
yeah,
Street Journal article for sure.
all of us were driving in 2015, right?
Oh, really?
2014, 2015. Oh, yeah. I didn't have a car, so I wasn't, but I was talking to drivers pretty
Yeah.
much every day. I mean, I have an Uber account now. I drive and then I give feedback. I'll like randomly email
Cool.
support and give like, they call it dog fooding. I'll give like random thoughts as a driver. But yeah, I mean, everyone was doing it back then too. I think, the difference again, when you have 200 people versus 40,000, maybe your public comms aren't that good. You're trying to tell everyone you
Yeah.
can, but yeah.
For sure. Well, with the last few minutes, I wanted to briefly touch on an industry that you ended up going to that had no drivers, really. I guess some independent contractors for a while, but like you said, was really more of a hardware company. So I'm curious, like, what made you and really so many others, right? Like go from Uber, go from Rideshare to Bird. I mean, it was kind of the hot company. I mean, scooter, micromobility industry in general, like, kind of talking about spotting that next opportunity. Like, what was it that made you kind of want to go into Bird?
That's a really good question. I think, just having been at Uber, we started to see openings for other startups. I think
Hmm.
food delivery like made a lot of sense. Obviously with Uber Eats, a lot of my Uber Eats people went over to DoorDash. Prabir, who's now the COO, was a finance person on our team. Ryan Sokol, who's their chief technology officer,
Oh, cool.
was our head of tech at Uber Eats. Like about half of their executive team were ex Uber Eats founding team
Hmm.
people. I didn't want to do that. I wanted to do something different. And what I noticed when I was like reflecting on my Uber time, and
Hmm.
you'll understand this as a driver and talking to a bunch of drivers. I felt I was living in San Francisco at the time, and I really felt like Uber had product market fit 99 times out of 100.
Hmm.
Right. I need to get to the airport. I need to go to this restaurant. I need to get picked up from this bar. I need to go to a friend's house. Like,
Yeah.
no cabs are in Pack Heights. No cabs are in Brentwood.
Yeah.
The one out of 100 that I recognized was like, we had an Uber office at 10th and Market,
Hmm.
and I had to get to like 6th and Market.
Right.
Right. And it's about a half a mile, but you can't drive on Market.
Right.
Right. And then all the streets are one way,
Yeah.
and you can't turn left on some. And
Hassle to
also
get
it's a
picked
half.
up and dropped off.
Yeah, it was,
A
and it
little
was
too far to walk,
crazy,
maybe.
right?
Yeah.
It was too far. It would have been a 20-minute walk, ended up being like a 20-minute Uber. And then the driver was unhappy because it was like a $6
Right.
ride.
Minimum fare. I
But
think we have a whole section in my course on how to avoid minimum fares.
right, yeah, no one was accepting because it was a pain too. And then I was like, oh man, if I just had an e-bike, if I just had
Yeah.
something, I could get there in 4 minutes. And so Travis Vandersanden, who started Bird, was actually at Uber, and
Mm.
he left and took like a 6 months to a year off. And his EA that he had brought over from Lyft when he came over from Lyft became my EA at
Mhm.
Uber Eats. And so I stayed in touch with Travis. And so when he started building this new thing, Bird, he took a number of the people from his like product team from Uber, this guy Ryan Fuju, and a few of the
Yep.
other people. He hired some really good SpaceX hardware engineers. They built Bird, and I was sitting there and I'm like, this use case, this is
Yeah.
exactly what I was looking at. Now I'm older, so I never rode a scooter. I rode a bike, and I
Mhm.
was like, I don't know about that. And he asked me to come down, or no, I was down meeting a team in one of my teams in Southern California, and he
Yeah.
asked me to grab a drink. And by the time we were at the Brig in Venice Beach, and by the time I left the drink, I had an offer for me and like 10 people that
Wow.
I could bring over from ops to come over. So people
Very
like Ev
cool.
Weiler and people early Uber people. And it made sense. They had this great tech, they had a great
Yeah.
product market fit, and they had no operations.
Mm.
And so they were just losing scooters left and right. They were getting dropped in bad places. They weren't getting repaired. And he really needed an operating team to be able to help,
Yeah.
help balance the really cool product with the operational
Yeah.
infrastructure.
Very cool. Well, you know what? We could probably do a whole episode now that I'm thinking about it on Bird and the micromobility side.
I have
But
so many things about
in the
micromobility.
last few remaining minutes and seconds of this episode, what are your thoughts on like the current state of the micromobility industry? Maybe skipping over a little bit of all the time and the experience at Bird. Obviously, we're kind of here in a spot where Bird is not where folks thought it might be. comparatively to, the Uber comparisons and things like that. I'm curious, if there's any, kind of reflections that you have, or, maybe theories as to why, or people to blame.
I think this is, I hate to say it, but there's always a balance between innovation and government. And I
Hmm.
feel like government restricts innovation. They don't like new things. And
Hmm.
I think micromobility, the real miss is the governments have really, really knocked a really interesting thing way backwards, to the point
Yeah.
where, you have a lot of governments out there, local governments, that are like anti-car, we need to
Hmm.
stop carbon emissions. And you're like,
Yeah.
hey, here's this thing. It's electric. It gets people around. It takes cars off the road. It takes parking
Right.
spaces off the road. It's beautiful.
Small.
Yeah, yeah. And it's small and it's electric, and also people are working because they're charging it. And
Yeah.
and they'll be like, well, there's one on someone's lawn,
Right.
okay. And so you end up with a world where they end up sort of shooting themselves in the foot by limiting the
Yeah.
capabilities of it. It's not the perfect hero, but it's not the hero you want, but it's the hero you need.
Yeah.
And I feel like too often, I mean, you even see like Paris just announced that they were like, that Paris was one of the largest micromobility cities in the world, and they just decided that they don't want scooters anymore. It's at the detriment of the cities.
Yeah.
It's kind of sad. I get they're not perfect, but I think at the end of the day, I think one of the biggest problems that they run into, and a lot of innovations run into, is you have a discrepancy between the users,
Hmm.
which tend to be younger, and the voters, which tend to be
Yeah.
older. And so it doesn't matter that millions of people are riding scooters. There's one 70-year-old voter that says that like there was a scooter on their lawn,
Yeah.
and public officials are going to listen to them because that's a vote, whereas like the college kids aren't voting, right? And so
Yeah.
it's that would be my one thing, is
Well,
if
I mean,
like if
even with scooters in Paris example, right? I think, I kind of feel pretty similarly to you. I feel it's like kind of a shame, a really missed opportunity, especially for the cities and, folks or regulators that really care about getting cars off the street and improving congestion and like first to last mile transit, right? Like I was a bird charger, as you may know, and I picked up many of scooters and dropped many
yeah,
off literally
yeah,
here in Santa Monica at the expo line. I'm like, oh, well, this is cool. People are taking them to the
yeah,
expo line and riding or getting off and riding, and in Paris, for example, like people that were using it for that use case, right? If you live outside the city and you
yeah,
train in and then get on a scooter, you couldn't vote in the referendum. So it's
yeah,
like the
exactly.
most powerful use case of scooters, right? Were like kind of not being counted in this vote. And like that is getting, now they're going to drive into the city, right? Or they're gonna,
Yeah.
what I mean. I mean, they're probably gonna drive into the city, for example, which is like kind of what you're trying to avoid. So, feel
Well, and it's
similarly for sure.
Yeah, and that's the thing. It's helping with climate change, right? It's helping get cars off the road. And then to your point, most of the people that are using scooters specifically tend to be
Yeah.
lower income, that live outside
Yep.
the city, service workers, right? And
Yeah.
now how are they going to get into the city?
Yeah.
Right. But they don't vote. They don't vote. And then also the tourists that are using the scooters to get around the city, they don't vote either.
Yeah.
Right. And so yeah, it is a discrepancy, but it feels like a beautiful product that I
Yeah.
think had real potential, that ultimately is going to go by the wayside because of issues
Yeah.
with local governments.
Well, we'll do a future episode on that potentially. I know we're a few minutes over, but last thing I want to ask you about is you're now founding partner at Nomad Ventures, and I'm guessing that you're leveraging a lot of this expertise, this network, and this insight into the fund that you're running. So, would love to sort of leave our listeners and viewers with what you're up to now at Nomad.
Yeah. So Nomad, as you said at the beginning, is an early stage venture fund. We invest in pre-seed and seed marketplace businesses. So exactly what you said. We're using our experience on the two-sided marketplace of Uber,
Hmm.
the three-sided marketplace of Uber Eats. My partner was at Open Door, which is a real estate marketplace. And so we're really using our experience evaluating and building marketplaces to invest in the next big marketplaces. Not everyone's going to be the next Uber, but if
Well, I think we've
if you
determined it's going to be tough to be the next Uber,
yeah,
right?
exactly. But if you have if people have an interesting marketplace idea, that's where we invest in. And for us, it really allows us to help people really use that experience. I mean, what we learned, over our time at Uber Eats, Open Door, has been pretty incredible, and be able to leverage that experience, be someone that people can call up and ask a question. How did you handle this? Or how did you
Yeah.
deal with this? I may not give you the right answer, but I could probably give you 10 wrong answers to
Yeah.
to
You've at least
avoid.
been there.
Yeah, exactly. And so, and it's just exciting for me to be able to use our experience experience to help the next generation of founders.
Yeah, very cool. Well, we'll definitely leave a link to Nomad. And I guess if there are any founders out there listening, are there specific details, marketplace businesses, or a certain stage or check size or anything like that you guys like to do?
Pre-seed and seed. So anything from I have an idea to we're starting to figure out product market fit. That's where we play. If it's past seed stage, it's too late
Got it.
for us. But we'll go as early as a founder with an idea if they have the right idea and the right founder.
Cool. All right, sounds good. Well, we'll leave a link to that. And I know you're quite active on Twitter. So if people want to find you on Twitter, we can leave your Twitter if you'd like. Or is there any other way you'd like people to get in contact with you or follow you?
Yeah, Twitter's the best way, at Chris Knack Taylor. That's the best way to get in touch with me.
All right, Chris, take care.
All right, thanks, Harry.